Is Bitcoin's rise set to soar even higher? If you're interested in knowing more about this, please keep watching. First, let's take a look at my long position on Bitcoin on Bybit. The entry price is around $28,500. Considering the smoothness and strength of this bullish trend, it is not a perfect entry, but rather an opportunity we waited for, such as a breakout signal, or a breakout above the previous high. Now, let's examine the current profit. It's currently around $55,000, which is a decent profit. If you're also interested in trading, feel free to click the Bybit link below. Completing KYC and depositing $100, you'll immediately receive a Bitcoin contract position worth $1,000. This is a real position, and any profits will be reflected in your account. Now, let's look at the current Bitcoin market. Starting with the daily resistance level. On the daily chart, we have marked a similar level. You can observe that regardless of the previous testing, when the price movement reached this level, it tested this level multiple times, with several candlesticks, and some of them did manage to penetrate it. However, none of their real bodies closed above the white line. This indicates a clear resistance level here. After touching this level, we experienced a decrease in volume and a subsequent decline. Currently, the price movement is trapped at the same level again, forming an oscillating continuation pattern after hitting 30,500. Then, after the price shot, let's zoom in on the chart to get a closer look. By narrowing down the time frames, we can observe that this particular area has indeed acted as resistance in the past, with previous tests and subsequent pullbacks. However, after the second surge, I believe it has already broken through. At the highest point of yesterday's surge, which we live streamed, it surpassed the previous high and settled at around $31,400. Currently, the price has retraced by nearly $1,000, which is not a small degree. However, what we can notice is that the retracement has landed on top of the previous support and has not breached it. From a short-term perspective, this is not necessarily a bad sign for the bulls. Why is that? Because in trading, we still need to follow the trend, riding the major trend and counter-trending on minor trends. The current major trend is bullish, evident from the weekly, daily, 4-hour, and 1-hour charts. The market has turned bullish now. It'd be reasonable to consider a long position at this point. However, we can look for counter-trends in smaller time frames, which might present excellent entry points, whether it's for contracts or spot trading. Currently, we can observe that the retracement at this level has had a relatively low trading volume. The volume has been gradually decreasing during the retracement. Additionally, the continuity of this decline is not strong. Furthermore, this downward movement occurred during the weekend. Since so, it introduces a particular situation where it leaves a CME gap. Let's observe the chart of the CME gap. Where was the previous closing price? It was around $31,200. This position is approximately $500 to $600 from the current price range. This range might provide a lower risk opportunity for profit taking because there is a high probability of a price gap fill in the CME gap. From a trading perspective, this could be considered one of the highest probability scenarios. Now let's return to the current market situation. If the price were to retrace to the $31,200 level, it would roughly align with the high point of the breakthrough we experienced yesterday. I believe it is highly likely to revisit that level sometime next week. Additionally, let's focus on the trading volume. It can be observed that the current volume is not decreasing compared to the previous uptrend. While the volume during the previous uptrend was continuously decreasing, it has now surged again. Let's draw a level on the chart to identify a potentially risky area for this bullish wave. Where would it be? It would be around the $28,500 to $28,600 price range. If the price were to drop below this level again, we would no longer define this wave as a bullish rise. Instead, it is highly likely to continue in an oscillatory pattern. Let's zoom in further to the hourly time frame. Currently, is there some stagnation in price movement? Well, when it comes to trading, especially in trend trading, we should pay close attention to the pullbacks occurring at the moment, or those that may arise in the future. Will they potentially reverse the current trend, or the bullish momentum we've been experiencing? Based on the current situation, if we switch to the 4-hour chart, you'll notice that both pullbacks we've experienced so far have been characterized by relatively lower trading volume. This applies to both the previous and subsequent pullbacks. Their volume shrunk. However, if we were to encounter a pullback with significantly higher trading volume, even surpassing the volume during the bullish price increases, then I would consider it as a potential threat or risk to the upward movement. Nevertheless, based on the current market conditions, it appears to be more favorable for the bullish trend. Alright, thank you. You're welcome to like and share my videos and subscribe to my channel. Turn on the little bell button to show me your greatest support. You're also welcome to join my line group, as I'm actively developing it and will be more engaged there. Thank you so much.